Thank you for joining me for today's video. As I mentioned in the past video, we're going to do a couple of videos, this is the second of them, where we're going to focus on some of the elements of the CARES Act that aren't the PPP or the EIDL loan. So in this video, we're going to be touching on the employee retention credit. We're also going to touch on the delay of employer payroll taxes. So here is a one-pager that covers all of the different elements in the CARES Act for small business owners. As you can see over here, we have our PPP and our EIDL loan. That's really where we've dug in so far. I've had several clients who basically say, look, I don't want to borrow money from the federal government, but there are other tax credits that are available to me. What do those look like? That's really over here in the employment retention credit, along with the delay of employer payroll taxes. So the first thing we're going to talk about is, what is the employer retention credit? Well, it's a new credit that goes against your payroll taxes, and it represents 50% of wages paid to each employee per quarter for a max of $10,000 per each one of those quarters. Eligibility for businesses under 100 employees. So if you're a DSO or a uber large practice, please reach out to me. We need to talk about some other elements of this, but the vast majority of people who see this are going to have less than 100 employees. And it includes costs for the employee that includes the qualified health care expenses. So if you have an employee that makes less than $40,000 a year, but does have health care expenses, this credit would apply to that as well. You must qualify by having operations partially suspended due to government suspension, which I think every dentist out there has experienced that, or have a quarter with less than 50% revenue for the same quarter in 2019. Now, quarter two, with our practices being shut down to the extent they have, you might qualify there as well. That's important because you will qualify up and until that suspension of operations is lifted. We have greater than 80% of the prior year, 2019, quarterly revenue, or the end of 2020. Keep in mind, you are ineligible for this credit if you have received a PPP loan. And the credit is not available for self-employed individuals. So let's look at two examples of that. Again, 50% up to $10,000 per quarter. So here I've got kind of example one. In quarter one, we received an order that we can only see emergency cases. Quarter two, that order remained in place. So in both of those instances, you qualified for the credit for those quarters. Quarter three, we assume that you have 50% of your collections from the prior year. And in quarter four, we're going to get us right to 80%. We're not above 80%, so we still qualify for that quarter. On the bottom, you can see we took advantage of unemployment in quarter one and in quarter two. Quarter one is kind of the short quarter, really because the payroll tax credit, the retention credit, only counts for wages past May 12th and then forward for the year. So in that instance, we're better off taking advantage of unemployment. We had some costs to the office until we got there. We also had some profit to the office until we got there as well. In quarter two, we're going to keep our employees on unemployment, and here we're going to assume we're going to open on June 1st. So that's kind of where we get that split of 50%, 50%, because even our hygienists who are making $45,000 a year, they did not come on payroll and make more than $10,000 for that quarter. Here in quarter three, where we're 50% of what we earned in the prior year, that re-qualifies us for that credit. So what you can see at the bottom is we as the owner have to take on above and beyond that $10,000 per quarter. So we're going to pay a little bit more. There's going to be a little bit more cost to the office than what we get in this payroll tax credit, but it still is over a $20,000 benefit to the office. Quarter four, where we have 80% in terms of our prior year, year-over-year collections number, we again qualify. And we again see a very similar breakdown. We're getting a lot of benefit from the office, but we're not getting the entirety covered. And so where you get to the bottom, we can see we've gotten from unemployment about a benefit of that expanded unemployment in the CARES Act we get almost $54,000 worth of cost reduction to the office, and then in the employer retention credit, we're over $40,000. The entire CARES Act benefit we got is up to $102,000. Now, in our second example, I assume we accidentally, in quarter 4, collect $2,500 more. So we went from 80% to 81%. So what you can see is that CARES Act credit goes away. And so now we've got that same $53,800 that we got from that expanded unemployment. We have $21,000 now that we got from the employer retention credit. Still a very healthy benefit from the CARES Act, almost $82,000 worth. However, playing forward, what happens in quarter 4 may leave a lot on the table, or it may give us something that we can take advantage of. So that's where in the employer retention credit there are future unknowns that I didn't necessarily want every client to be exposed to or every dentist to be exposed to. Also the case that the employer retention credit, from everything that we're seeing, is going to reduce the basis for tax purposes in terms of what you pay your employees, whereas the PPP is a tax-free forgivable amount. So in the majority of cases, the PPP is a better overall financial deal. However, if you do not want to have the federal government as your lender, this is a nice rebate that we can take advantage of that is above and beyond just taking advantage of that expanded unemployment that hopefully you have been taking advantage of up until now as well. The other element here is the deferral of payroll taxes. So employers are permitted to defer 2020 payroll taxes for all of 2020. Now, 50% of that's going to come due by December 31st, 2021. The remaining 50% will be due by December 31st of 2022. So the way we look at that is, it's basically an interest-free loan from the government to help as we get through this time. It does apply to self-employed individuals, however, only 50%. That 50% that's due like normal, then we've got 25% that we'll have to pay in 2021 and 25% that we'll have to pay in 2022. Unlike the employer retention credit, where if you received a PPP loan, you could not qualify for this. Only if you are forgiven for a PPP loan can you qualify for this. So if we got the PPP loan and for whatever reason we're not going to seek that forgiveness amount, this then comes into play for us as well. Or if you do not pursue the PPP loan, you can get both. Keep in mind, all of this is separate than the EIDL loan, so that's an aspect that we don't necessarily need to worry about. Those two elements are important and they can be beneficial to the practice. I wanted to bring them to your attention so that you're aware, whether you chose to pursue the PPP loan or not, you still have significant financial benefit from the CARES Act that is going to help in the management of the practice and your overall financial health. Thank you very much.